Live, BNY Wealth Chief Investment Officer Sinead Colton Grant. Well, first of all, you got the downgrade. Markets don't seem to be fazed by it. I mean, sure, we got a little bit of a loss here, but nothing bad.
Well, it's not really new information, Liz. That's why, because it was the third of three ratings agencies, and the first downgrade happened over a decade ago. So, you know, it's interesting to see the third one, but it really is all about the debt and deficit and the outlook that we're talking about in relation to the tax bill and what happens to the deficit from here.
So you don't see a delayed reaction maybe a week or two down the line to this credit rating downgrade?
The bigger focus is going to be on the tax bill being negotiated right now. I mean, sure, we've seen a handful of basis points in the long end of the curve, but really what markets want to focus on is, are we going to see any reduction in the deficit? Are we going to see reduced spending? And that's really what's going to determine yields from here.
We're coming up on the tail end of earnings season. It's not been that bad. In fact, 25% of S&P companies actually raised their full year guidance. So it doesn't appear to be the worst possible landscape that we're looking out at. So is there an area where you say, you know what, we got to be careful here, but by the same token, we need to take advantage of some good priced companies and sectors?
So look, overall, Q1 was great. Earnings at 13.8% increase relative to 11 and change coming in. So that was really strong. The problem is that was all before tariffs. And so there's a lot of information that isn't included there. And we know that consumers were front loading to a certain extent. When we look at the market overall, generally we like US equities. We think that the downturn that we saw in early April through April, that was a great buying opportunity, and we've seen almost a 20% jump from there. But in terms of sectors that we like financials. We think that the yield curve slope right now is attractive, but more importantly, in the second half, once we're through tariffs, once we're through the tax bill, then we think we get deregulation, which will be helpful for M&A.
Well, are you blowing off the fact that Moody's also cut its ratings for deposits on some of the biggest of the big banks, including Bank of America, JP Morgan, Wells Fargo, citing pretty much last week's downgrade of the U.S. and its credit rating? That doesn't concern you?
It's not surprising, because when there's an impact on the sovereign, you typically see that filter throughout the broader financial landscape. We are more focused on the growth in the economy over the second half.
Okay, so how does the consumer look to you?
The consumer is having quite a time of it,
okay,
right? There's a lot they don't know.
There. Yeah, it's very unsure, is it not?
There are two things here. We know that it has been the top 10% of consumers that's really been buoying the economy for the last, call it, 2 years. Mm-hmm. The remaining 90% really do not have a lot of bandwidth to absorb higher prices. So even in early April, post-Liberation Day, we were far more worried about the impact on growth than on inflation. And so what consumers are really waiting to hear is, where do tariffs settle? And most importantly, what does it mean for my pocket?
All right, so we do have consumers who invest. We've got viewers right now saying, tell me what to do. What is your gut punch to everybody out there about the next 6 months?
So the next 6 months basically brings us to the end of the year. The second half will be stronger. The rest of Q2 a little bit more bumpy. But look, US equities, the S&P 500 is barely positive year to date. You compare that to any of the European indices pretty much, they're up 20+%.
You're holding your price target on the S&P.
Well, we had taken it down,
yes,
and we had increased our recession risk, but now we're back. We're up at 6,400 as the upper end of our expectations. We think earnings expand by about 9%. This is a pretty good time to add to US stocks. I mentioned we like financials. We also like the tech sector. There is going to be a lot more volatility there, but longer term, we think the spending on AI continues.
Well, it's interesting. You look at some of the AI-centric stocks like NVIDIA down today, SMCI also down, Palantir lower. But this is just sort of a day-to-day issue, you feel? Nothing too dramatic?
Absolutely. I mean, look, there are some geopolitical headwinds for a number of those names. But longer term, you need to keep your eye on the prize. You need to think about the longer term growth, and that's what generates wealth over years and years.
Sinead, for people who are looking at their portfolio and they have some dry powder, some cash at the moment, where is your favorite, let's take a chance, a little bit of a flying leap. Where is your favorite area in the markets? Is it anything international? Is it anything that seems to be sort of counterintuitive? I mean, look, we had the situation with United Health Group. That was a single stock issue where the company is being accused of Medicare fraud. So interestingly enough, today United Healthcare is way up. So the big sell-off last week, now it's way up, but again, you had a lot of insiders, the CEO and a lot of top executives buying in, something like 25 million, I think this current CEO is buying to prop up the stock. So is that good enough for you in a healthcare sector kind of picture?
We tend to focus less on the individual names like that and think about the broader themes that are going to play out over the long term. So one of the sectors that we like is utilities, but it's less about the traditional roads and bridges, but more alternative infrastructure. So thinking about data centers, cell towers, and looking at the names that are more exposed there. So again, we do like to always have a focus on growth and where the economy is going, not where it's been.
Well, anybody who's left their cell phone at home and they get in the car and they're halfway toward the GW Bridge or the San Francisco Bridge knows how important the cell towers are and cell phones and all of that. So it's like food, you got to have it. So it seems like an opportunity there. Thank you so much, Sinead. Good to see you.
Great to see you too, Liz.